Hello there and welcome to the Tolworth European Fund monthly update for January 2020. For those of you who haven't come across us before, I recommend you look at our introductory video. This is the first full month we've been running this fund on behalf of Hedge Invest. It's been another month of transition for us, as we've been working the portfolio to get to where we want to get to in terms of a balanced pan-European portfolio with plenty of exciting opportunities in the UK, very much Tolworth's heritage, and some new exciting ideas, long and short, coming through on the European side. Absolutely key to the future of this is the addition of Fred Batua to our team. Fred is a really experienced long-short stock picker, and we think he's got a great future ahead with this fund at Tolworth. So I'm going to start by looking at the UK side of the book. What we've done here is we've taken the mid and large elements of our existing dynamic strategy and placed those into this portfolio. We've got a strong team here, remember, John Warren, who I've been working with since 2010, Seb Jory, who joined us in 2018, who's got a strong macro background and has got our UK Select large cap long short strategy with a lot of overlap here, and James Gurlis on investment research. So the main themes in the UK, been an interesting month broadly in the UK where markets are pretty weak at the beginning of the year, worried about virus, risk off, obviously the issues in Iran weren't generally good for markets globally. The positives and negatives for us were, we had some good results from some of our long-term positions like Intermediate Capital, keeps on delivering for us. One or two other names in that sector like Ashmore are also strong. The big negative in the UK for us was Fever-Tree. You may recall this is a tonic water disruptor, I guess, the up-and-coming brand globally as an alternative to the major global player Schweppes. Fever-Tree's been a fantastic growth story for a long period of time, largely in the UK. And it's now emerging on the global stage. A little bit of a hiccup in timing and penetration into the US caught investors out a bit this month, and that did hurt us a little. We've got great long-term confidence in the Fever-Tree story. We've known it really well for a long time, close to the management team, and we're going to take a view that when we look back at 2020, it'll be a hiccup in the long-term story. Let's see how that pans out, but we're sticking with it for now. Okay, so let's have a quick look at the short book, shall we? What's worked for us there? We've benefited a little bit in travel. Unfortunately, the virus there has been bad news for travel stocks broadly. So that helped us a little bit. Chewy probably was the standout short there. It's recovered a little bit since on some relatively decent numbers. I think another thing that's done well for us on the European side has been Banco Sabadell. Again, another one that's recovered a bit in February. But it was a very good short for us on weak numbers last month. Also, we've done well in real estate. Unibail-Rodamco, again there. Globally, real estate stocks weak, and I think we generally feel with our long experience of investing in the UK that European real estate stocks are really yet to kind of get us up to speed with where real estate's going in terms of less emphasis on retail parks and some of the traditional money-making places for long-term retail investors, moving away to tactical logistics locations and a bit less focus on core high street. Offices have got to be well located in the modern tech-led world with a lot more online delivery. I think the UK has been at the kind of spearhead of this in Europe, and I suspect we're going to see that come through. That could be quite a nice read-across trade for us for many months to come. So how do we see the rest of the quarter and maybe even the year panning out from here? It's far too early to make any big predictions. So a tough start to the year for markets, followed by a bit of recovery so far this month, has probably been a combination of factors. Relatively weak macro as far as we can see. In fact, in the UK, there's very little evidence, really hard evidence that the UK recovery is coming. I think most people still feel it's there, and most people still feel that the UK is an interesting recovery story generally with a more front foot pro-business government, but yet to see any real hard evidence in stats for that one yet. Global macro generally quite weak. We've had the geopolitics. Coronavirus is clearly a real impact across so many sectors and a massive unknown. It's been interesting to see more and more companies just saying, look, we're pulling our Q1 forecasts here, let's see what happens. And I think if the virus doesn't evolve much more negatively, people will accept that that's a perfectly reasonable thing to do, and perhaps share prices will gently look through the virus a little bit more, although I'm sure we're going to see more warnings, we're going to see more supply chain disruption. So I think it's a pretty weak global macro picture out there for us, and we've got to be very mindful of that. So pretty cautious positioning overall. Looking forward, I think we'll be keeping that. No reason to get super bullish on the UK yet,
We can see the recovery story out there, definitely going to make some money in some of the quarters this year in the UK, but right now probably quite a challenge. Overall positioning, slightly long, but generally the fund feels like it's more of a capital protection type positioning rather than making out in a fast rising market. Never really been our skill set that anyway. So cautious outlook, concern for those on the virus front line, of course, and keeping our mind open to a weaker macro picture. Overall, exciting year to be running money. Very, very pleased to be running this fund and looking forward to bringing Fred to the forefront of the strategy in the coming months. Thank you very much for listening.